Hugh Hendry is a 41-year-old hedge fund manager from the UK who's very provocative and has been in the media for at least the last 2 years with a bold, bearish call against China. This past weekend, he was featured in a Bloomberg article where he was promoting his views on why China is about to collapse again. And if I was going to boil his argument down, it runs as follows. Basically, there's a real estate bubble going on in China. This is at some point soon going to collapse. When it does, the Chinese stock market is going to collapse. And when that happens, it's going to freak the world out so much that it's going to throw the rest of the world into an equal stock market correction. When that happens, the argument continues, no longer will the West be eager to buy up the Chinese goods as they have been. Therefore, Chinese exports will plummet, and this will throw the whole Chinese economy into a tailspin that the Chinese government is not going to be able to stimulate its way out of. Now, that's a point of view, and Chanos and others have put it forward very strongly. My problem with Hugh Hendry, who I like, and I actually, I find his thinking stimulating and thought-provoking, but I think he's dead wrong here. And the thing that I really dislike most about his argument is that he's been wrong for 2 years running. He has put forward these same arguments starting in February 2009, just as the market was approaching a bottom, where he was saying that the worst was just starting. He then, and specifically referred to China. He then talked about the same thing 6 months later in the fall of 2009. He's talked about the same arguments in op-eds that he's written in the Daily Telegraph in 2010, and now here he is in early 2011, beating the drum again with the same arguments, and it's been wrong. And at some point, everybody deserves to be wrong. Everybody deserves to double down on their bets if they truly want to stick to their guns. But I think at some point the media's got to put Hendry into timeout for this call and really not give him the platform just to continue to beat the drum. Same thing with Chanos and others. I'm a China bull. My basic argument back against the bearish point of view is that the Chinese government had a lot of financial flexibility. They don't have the same debt problems that the U.S. and Europe have, and therefore, even if the worst case scenario comes true and there's some need for a massive government bailout of the Chinese banks, they have the financial flexibility to do that. So I would I look forward to reading more about Hendry's arguments in the coming months and years. But on the China bear call, I think he and Chanos should look at Mark Faber, who was a former China bear who recently came out and said, and I'm quoting, "It may be a painful adjustment, but in the near term, there is no danger of an implosion in China."